My name is Bruno Bianchi Sarcone. I run Spainguru.es, and this is the Spanish Taxes webinar. Today is the 28th of October 2025. Recently, Spain changed time, so there's a bigger gap with some other time zones. And yes, we're going to be going through this presentation, and we're going to have a Q&A session at the end. You can ask your question anytime during the presentation. You write your question in the chat box in the bottom right corner of your screen. Make sure to add a question mark at the end so it's easy for me to see that you're asking something. A little bit about Spainguru.es. First of all, our objective is facilitating the relocation process for English-speaking foreigners to Spain since 2014. You can find good reviews out there, about 260 reviews among Trustpilot and Google. 99.9% of them are 5-star reviews. So you're in good hands. And you can use Spainguru.es for free. Everything in Spainguru is free. Weekly newsletters sent to 15,000 readers every single Monday. YouTube channel with more than 1,000 videos, many of them about taxes, with almost 2,500 subscribers. Blog posts, almost 2,000 articles, and a huge community. Facebook groups, Reddit as well, of an aggregated total of 150,000 members. Spanish immigration, non-lucrative visa, digital nomad visa, moving to Spain, Americans in Spain, and so many groups, right? So all these resources are free. Plus, also the Move to Spain checklist. Move to Spain checklist is a wonderful tool that you can use. Today, it is free. As I said, everything on Spainguru is free. So it can help you move to Spain and warn you to do your tax preparation and consultations. You can start 12 months before moving to Spain. And for example, you go here, and one of the things I am telling you you could start with is understanding your immigration options and learn about your taxes and joining this webinar, for example, and many other things. Budget tool, joining the community, and choosing your best location, right? For that, you can also use our Spainguru destination section, right? With 13 destinations where I think 95 of expats move to. So if you go to Spain destinations, you can find top cities and areas in Spain. And these are, the cool thing is that a lot of this information is constantly updated. It's dynamic, okay? It's state of the art because it links with services who are. So you have Weather Spark, it is updated to check the climate. You can see Numbeo directly related to the city. Okay, so you can see the cost of things. Idealista for rentals. So also again, fully updated. So many things. So yes, definitely, please use Spainguru. It is free. It's definitely worth your time to spend a few minutes at the very least and check out this website that I built with so much love for you guys. And of course, if you want to have professional experts for the different things like immigration, tax advice, financial planning, those three are, for me, in my opinion, essential. At least tax advice and immigration advice before you take the decision to move to Spain. And those two things need to be aligned for your long-term strategy of staying in Spain. At least consult an hour with experts on these two fields. They don't have to be from Spainguru. You choose the ones you like, but make sure to at least consult a couple, like 1 hour, a couple of hours with them, so you are sure that your vision, your idea makes sense and can be executed without, let's say, surprises, right? And then you have many more services like health insurance for your visas. You can find on Spainguru.es, medical certificates, loan translation, postal services, bank accounts, money transfer services, property rentals, mortgages if you want to purchase property in Spain, and many more services. International moving quotes, shipping, parcel, so many things. Learn language, adult, Spanish for adults, tutors, like so much stuff. Yeah, definitely worth looking at it. So enough about Spainguru.es. Now let's talk about a little disclaimer here. This presentation is for general information only and is not legal or financial or tax advice. For personal guidance, consult a qualified advisor. I am not a qualified advisor. Please find trusted experts on Spainguru.es. Spainguru is not liable for errors or outcomes from using this information. The objectives of this webinar are four. First, gaining overview of the Spanish taxes, hopefully preparing you to have more informed conversations with tax experts, okay, so that you engage more effectively with them and you speak their language, okay, which sometimes tends to be difficult when you speak with someone who is all day, going to something specific like taxes. Sometimes, they use jargon and everything. So it's important, I think, that you get a little bit more qualified to this so that you get better conversations with them and more informed, okay, conversations. Clarify the role of professional tax advice and understand that this webinar is only for general information, and so that you understand the deep implications of your individual circumstances that will have a significant impact in the tax liabilities, right? So it's impossible to go into each of the specifics of your personal circumstances, yes, but at least understanding the general ones, you can potentially find what implications could have your specific situation. And then identifying key considerations for expats, like learning about potential tax implications with a focus on US and UK nationals. But I would say 95% of the content in this webinar applies to anyone moving to Spain. And be aware of compliance requirements and deadlines to avoid potential penalties. So all that I hope you'll gain in this webinar. First and most important concept, Spanish tax residency. You become a Spanish tax resident and therefore must pay tax on global income if any of the following conditions apply. Most important is if you spend over 183 days in Spain within a calendar year that goes from January 1st to December 31st, the days don't need to be consecutive. It doesn't matter your immigration status, whether you're a tourist, you're a holder of a residency, doesn't matter. Your physical presence count towards this 183-day threshold, okay? And if you are over 183 days in Spain, then you will become a Spanish tax resident. If you spend less than this time, okay, you wouldn't be considered a Spanish tax resident unless any of the other two conditions apply. Important one, if your main economic activity or primary income source is in Spain, and one that is quite common, if your family lives in Spain, regardless if you live like all year long in Dubai, to say something, okay, if your family lives here, Spanish tax authorities will consider you a Spanish tax resident, potentially, right? Anyways, the 183 days threshold is interesting and it's important because if you time your move to Spain correctly, that is, if you move to Spain after July 2nd, let's say, and you plan to spend every day until the end of the year, then you wouldn't become a Spanish tax resident for that calendar year that started on January 1st, right? That's why it's very important that you verify your travel records, you count every single physical presence in Spain in a calendar year, so that you don't go beyond this threshold, okay? And always refer to double taxation treaties in case of conflicts, okay? Sometimes there are conflicts, the different rules of the different tax jurisdictions of different countries, maybe potentially one country is considering you to be a tax resident, and at the same time, Spain does too. So if there is a double taxation treaty, there are tiebreaker rules that will decide where you are tax resident during that tax year. So it's always also good to have that in mind, right? Now, the consequences of being a tax resident in Spain is that you will be subject to taxation on the worldwide income and potentially on the net value of your assets anywhere in the world. Now, if you're a non-tax resident in Spain, you will be taxed as a non-resident only for the income and for the net value of your assets sourced from or located in Spain. For example, you're a non-Spanish tax resident and you own a property in Spain. If you rent it out, you will pay taxes as a non-resident for that rental income generated from a property located in Spain. As we said, the tax year in Spain is a calendar year that starts on January 1st and goes to December 31st. January 1st, the clock goes back to 0, right? Now, if you become a Spanish tax resident anytime during that calendar year, you will be a tax resident retroactively from January 1st during that calendar year. This year, the tax year, is different from the immigration year, which is a natural year. Immigration year starts the day in which you gain residency in Spain, which tends to be the day in which you enter Spain holding a visa that gives you or grants you a right to obtain a residency. For example, if you enter on July 2nd, your immigration year will go from July 2nd, 2026, for example, until July 2nd, 2027, right? Therefore, tax years and immigration year may or may not overlap, and you can play with it. And here's a representation of something that probably came to your mind. As we said, 182 days enable you not to become a Spanish tax resident in Spain. 182 days is one day before the threshold of 183. Therefore, if you arrive after July 2nd in a given tax year, your immigration year starts that date and goes on a natural year after that, right? And you can see there the red bars and the blue bars, they don't, let's say, overlap, right? And so you could potentially play with that if your strategy is to stay in Spain, let's say more than 90 days, but less than 183 days. Potentially there are possibilities not to become a Spanish tax resident, but still live as, let's say, a decent amount of time in Spain. Now, let's go back to non-residents. Depending on which passport you hold, if you're an EU passport holder or associated countries, you have different tax rates for the different types of income source in Spain. Whereas if you're a holder of a non-EU passport, typically it's 24% tax rate for your income in Spain. As we mentioned, rental income is taxed at 24% as a non-resident. Now, let's talk about tax systems or regimes and the obligations in Spain. There is a general tax regime and a special tax regime. The general tax regime includes personal income tax, or IRPF, the regional wealth tax, the nationwide solidarity tax, and the 720 informative form for declaring overseas assets. Now, the special tax regime, also called the Beckham Law, first of all, it's not for everyone. Not everyone moving to Spain is eligible. 99.99% of eligibility goes to employees working for companies abroad. Okay, and for example, if you move to Spain as a contractor, you wouldn't be eligible for the special tax regime. This is important, right? So this is especially important for digital nomads who have these two options, whether they move as employees or they move as contractors, freelancers, or autonomous, right? So if you are in the second group, you probably are not going to be eligible for the Beckham Law. It's not absolutely impossible, but very, very low chances. Now, what are the advantages of this special tax regime? Income from outside of Spain is not taxed except for the employment income. They apply a flat 24% tax rate. Therefore, let's say that you are taxed as a non-resident, yes, and you don't have to pay Spanish income tax on the rest of your worldwide income, for example, rentals, dividends, etc., right? And you are not subject to submit the 720 form, where you have to disclose the value of your assets held abroad. Neither have to pay the wealth tax in Spain, right? So those are many of those advantages for this special tax regime, but there are also certain cons. The tax savings for earnings lower than 55,000 euros per year are minimal, and it is most of the time not recommended to go with the special tax regime because there are additional administrative burden that may outweigh the benefits of this regime. There are no family deductions, no allowances, and therefore you will be paying more, let's say, more tax in the end, and also more costs in order to file those taxes. Therefore, if you're making less than this threshold, probably you're better off with the general regime, with the general regime. Now let's talk about the first tax obligations, overseas assets reporting or 720 form. This is where you inform the tax authorities in Spain of the existence and value on December 31st, the previous taxable year, of your assets and rights held abroad. And those assets and rights held abroad are grouped by categories like, for example, bank accounts, investments, properties or real estate, cryptocurrencies, and if any of these categories goes over 50,000 euros, you have to declare everything in that category. For example, if you have 2 bank accounts outside of Spain and in each bank account there are 25,000 euros, the total category is 50,000 euros bank accounts. Therefore, you have to declare the existence of both bank accounts and how much their value is by December 31st. The first year in which you become a Spanish tax resident, there is a full disclosure requirements, and tax authorities will look at this information in order to take their own conclusions of your net worth for wealth tax purposes or solidarity tax, and potentially even for personal income tax. Like, for example, if you have properties abroad, Spanish tax authorities may think that you are renting them out and generating an income, okay, potentially. Now, subsequent years, you don't have to declare this form or submit this form every year unless there are changes in the value of each of those categories of 20,000 euros or more, or if there are asset closures. The deadlines to submit this form is March 31st, and you usually start to prepare it 3 months before when you work with a gestor or tax accountant or tax advisor. And this is an informative form. It's not a tax per se, okay? But authorities know what you have outside of Spain, and of course they know what you have inside of Spain. So now they have, let's say, a complete overview of what you own anywhere in the world. Second tax obligation is the income tax, okay? Now, there are different types of income, and depending on the type of income, you will face different progressive tax rates. You have ordinary income and you have investment income. Inside ordinary income, you have salaries, rental income, and business earnings. This type of incomes are subject to progressive tax rates that range from 19% to 47%. And we're going to see later on how we calculate those rates. Okay. Then there is investment incomes. Within this, you can find dividends, interest, capital gains tax, and are taxed at lower rates, starting at 19%, going all the way up to 30%. The annual deadline for the income tax submission or filing is June 30th. Therefore, for all 2025, we will pay the income tax on June 30th, 2026. Okay. And you also start preparing it with your tax accountant 3 months before. If you're an autonomo, freelancer, or contractor in Spain, you also will have to pay quarterly income tax as well. You would pay 20% of your income. Let's say apply a 20% tax rate to your quarterly income, and then in the annual tax, you will pay what is left, which always you will have to pay more, okay, than 20%. That's for sure. For US citizens, okay, as you probably know, if you're a US passport holder, you're always a taxpayer in the US, regardless where you are a tax resident. Therefore, you need to file taxes by April in the US, but if you live overseas, you get an automatic extension on the deadline to file your taxes until June 15th. So many people, what they do in Spain, they pay their income tax or all their taxes in Spain before that date, and then they credit the taxes that they have to pay in the US, okay, what they paid in Spain. Therefore, and thanks to the Spanish-US tax treaty that says that you don't pay taxes on the same thing, you will not have to pay taxes in the US. You will just file, but then you will show that you paid your taxes in Spain. Those taxes will be normally higher of what you have to pay in the States. Okay, therefore the States will not claim anything because you already pay your taxes in another jurisdiction with an agreement, right? There is some discussion among Americans whether it is better to pay the taxes first in the States than in Spain, but generally this is what happens. Okay, you pay in Spain first, and then you create that payment towards your taxes in the US. There's also another extension until October, okay, that you can ask, you can request. I think you have to pay some interest, etc. But there's also that possibility to delay the filing if you need. Okay. Now, this is a common question, and this is also to show you how the progressive tax brackets work, how we calculate things. So a lot of people say, if I make 100K income, is it true that I will have to pay 45% income tax on that income in Spain? And the answer is, excuse me for that, the answer is no. Okay, taxes in Spain are high, but not so crazy, right? Let's see how we calculate this. You can see the 6 tax brackets on the table on the right. And the 5th bracket is from 60,000 euros income to 300,000 euros of taxable income. Therefore, if you made 100K, normally you would think, oh, I fall into this 5th tax bracket, I have to pay 45%. But that's not how it works. What happens is that you start paying the lower taxes until you reach that amount. So the first 12,450 euros that you make, you will pay 19%. Okay. Of course, there are allowances, deductions, etc. But this is for illustration purposes, so that you understand that in the end you will not pay 45%, but rather you will pay a sort of average or median, okay, of those brackets. Yes. So for the first 12,450 euros taxable income, you will pay 19%. For the following 7,500, you will pay 24%, 30% for the next bracket, etc., until you reach your 100K of taxable income. Therefore, if you do your numbers, you will be paying an effective tax rate for 100K taxable income of 36%, which is not low, but it is not 45% effective tax rate. Now, I made a calculation here. Well, again, this is just for illustration purposes only. If you make 30% taxable income, you'll be paying an effective tax rate of 24%. If you make 40K, 26%, 50K, 29%, 60K, 30%, 70K, 32%, and as we said, 100K, you'll be paying around 36% effective income tax rates. Let's talk about the third tax obligation, the regional wealth tax and the national solidarity tax. The regional wealth tax, or impuesto del patrimonio, is a tax that is calculated or based on the net wealth, your net wealth, as of December 31st of the last taxable year, right? Depending where you live in Spain, because it's a regional tax, so each of the 17 regions have a certain freedom to choose how they will tax this. Depending on where you live, the threshold that triggers this tax starts at 500,000 euros, okay, or around 700,000 euros. Now, several regions like Madrid, Andalucía, Cantabria, Extremadura, in practical terms, they don't have the solidarity tax, either because they raised the threshold to 3 million euros or because they have 100% rebate, etc. But basically, you will not pay. Maybe you have to file, but you will not pay wealth tax, okay, if you're over the thresholds. Valencia raised the threshold from 500,000 euros to 1 million euros, effective as of December 31st, 2025, this year. So, depending where you move, you will be potentially liable for paying this regional wealth tax on the net value of your assets. Yes. Now, there's also something called the 60% rule, which is hard to understand and it's hard to explain, even harder to explain. But basically, you can use this tool to reduce up to 80% of your wealth tax. Okay. This is especially for people who have a high net worth, but let's say a low income in relation to the net worth. Okay. In short, the wealth tax is capped in this situation. If you can trigger this rule, wealth tax is capped at 60% of the income, but at least 20% of a wealth tax must still be paid. Okay. So have that in mind and talk about this with your tax advisor. If you're liable for the wealth tax, ask about the 60% rule if this is something that could be applicable to you. The deadlines for filing the regional wealth tax is June 30th, coinciding with the annual income tax. And also you start preparing for this tax 3 months before. Now, the solidarity tax is not a regional tax. It is a nationwide tax that applies to anywhere in Spain. So it doesn't matter where you move to, you can't escape it. The good thing is that the threshold to trigger this tax is much higher. It's at 3 million euros. Okay. And there are also allowances and deductions, okay, to, let's say, deduct from the taxable income. Yes. So like, if you own properties or if you already paid something for the wealth tax, it can be credited towards the payment of the solidarity tax. And the deadline for this nationwide tax is 1 month after July 31st. Okay. And the reason why is because if you paid wealth tax 1 month earlier, you can say to authorities, no, I already paid wealth tax. You have to deduct this from my payment. Now let's look at a calculation of someone who is, let's say, living in Catalonia. Okay, in Catalonia, this is the region of Barcelona. And imagine that this person owns a property in Spain that is at least 300,000 euros. Well, you can extract from your taxable wealth up to 300,000 euros if you own a property. Therefore, if in Catalonia the threshold is 500,000 euros and you deduct 300,000 euros, you have 800,000 euros that wouldn't be taxable. Therefore, and let's go with the table, the first row, if you have a net worth of €1 million, you deduct 800,000 euros, you would only be paying wealth tax for 200,000 euros. You apply progressive tax rates, you will be paying less than 500 euros for that year. If you own $1.5 million, you'd be paying 3,000. For 2 million, 8,000. For 2.5 million, 14,000 euros, right? And then over 3 million euros, then there is the solidarity tax with different tax rates. And what you have paid, if you had paid wealth tax, you can credit it towards it. Now let's talk about digital nomads. A few slides about digital nomads. Okay, as we said, there's 2 ways you can move to Spain using this quite new visa, either as an employee or as a contractor. If you're moving as an employee, okay, working for a company from outside of Spain, yes, okay, so as an employee in the States, it's equivalent to a W-2. You will have to prove to Spain that you're paying Social Security in your home country, okay? How do you prove that? By submitting an A1 form or certificate of coverage. At the moment, UK employees and American employees are being accepted. Employees from other countries are not being accepted because of problems with the certificate of coverage. Now, the interesting thing about moving as an employee to Spain is that you could potentially be eligible for the Beckham law with all the perks that we mentioned before. So that's interesting. Now, if you move to Spain as a contractor and you have to become an autónomo in Spain, which is the tax, let's say, category of a contractor in Spain, autónomos, now you will have to pay Social Security in Spain. Yes, Social Security in Spain entitles you access to the public healthcare sector in Spain, pensions, sick leave, parental leave, a lot of things. Okay. But you also have, of course, to budget that into your budget, okay? Because Social Security payments, monthly payments, are not low. Now, if you move as a contractor, as I told you, It's not very common at all that you will be eligible for the special regime, Beckham law. And if you are an autonomo in Spain, not only you will have to pay taxes on an annual basis, but as we mentioned before, you will also have to pay income taxes on a quarterly basis. Also, you have to pay VAT. If you're moving as a digital nomad and you are having clients abroad, chances are you're not gathering Spanish VAT to them. Therefore, you won't have to pay that VAT back to the Spanish authorities, let's say. So it's not that common. But yes, you will have to file your income tax on a quarterly basis and your VAT on a quarterly basis. And also there is a VAT annual declaration at the beginning of the year as well. This is only if you are an autonomo in Spain. Special case, someone who arrives in the second half of the year, therefore spending less than 183 days that tax year. Example, this person arrived in Spain in September 2024, applied for a digital nomad from Spain in October, was approved in November, and registered as autonomous in December. Yes, this person was asking, should I pay taxes in Spain during 2024, or do I have to start paying taxes in 2025? An expert said this is a particularly gray area as you weren't resident until you got your residency card, so you weren't even officially allowed to work. But you're supposed to pay tax in the country where you're physically working, so strictly speaking, on any work performed since September. So even if you weren't technically a Spanish tax resident, since this person was in Spain working on its computer, generating income from Spain, all generated income from Spain must pay tax at least as a non-resident. Okay, so the let's say experienced tax advisors and understand this, especially this visa as well, will tell you that potentially you will have to pay taxes as a non-resident in 2024, and then in 2025, when you become a Spanish tax resident, you would pay taxes as a Spanish tax resident. Now, there's been some news of a proposal of the government to raise the Social Security payments a lot. Then they reduced it. So it is still under discussions. But the truth is that there is a plan to raise the Social Security contributions for autonomous for the next years. I think it's until 2032. The question is not if it will be happening, rather like how they will meet that objective of raising it. So now it is still under discussion, but soon we'll get news about how much they're raising. And the first announcement was a killer announcement because yes, for higher earners, it went from 600 euros a month to almost 800 euros. For the lowest was from 200 euros to 217. But this was the first announcement. Then they went back. They said, no, this is not going to be like that. So this is still under discussion. Okay. But I'm going to keep you updated if you're in this situation of becoming autonomous in Spain. And if you want to know more about the Spanish digital nomad visa, please join my webinar that I hold every 15 days. It's free and I always send you a recording. And remind you that there is a Q&A session at the end of this presentation. But if you have to leave earlier and you think the information I'm sharing with you today is useful, please help me out by leaving a review on Trustpilot. There's a red button on the top that will redirect you to this platform where you can leave a review, and it only takes 2 seconds, and it will be really, really amazing, and I will be super grateful for it. And if you're watching this on YouTube, please comment. Do you have any questions about taxes in Spain or about moving to Spain? Please let me know. Please comment below, and I'll do my best to answer you as soon as possible. Now let's continue. Let's talk about additional taxes in Spain. And let's take away this button here so it's easier to read. Some taxes that are important, like inheritance and gift tax. This is a regional tax. Therefore, depending on where you live, you're going to be paying different tax rates. And in the case of Spain, the structure of the family, let's say, or the heirs has a very big impact on how the inheritance tax is calculated. There are tax reductions or exemptions that vary by regions and depending on the level of connection of the heirs from the person leaving the inheritance or giving the gift. So yes, if you live in Madrid, for example, you almost don't pay anything. If you live in Catalonia, you pay quite a lot, so you have to plan accordingly, right? Then there is the transfer tax. If you're planning to buy a property in Spain, there's two options. Either you buy a new property, just built property, then you would pay a national VAT, a reduced VAT of 10%. General VAT is 21%, okay? 10% for hosteleria, which is like restaurants and everything, and also new build properties. Then there is 4% for basic products like eggs, bread, etc. Okay, and the transfer tax is also a regional tax. So if you buy a property in Madrid, you will only pay 6% of the purchase value. In Andalusia, 7%. Okay, there are variations. Okay, depending even inside the same region, but more or less those are the ranges. So Andalusia and Madrid are favorable communities to buy property in this sense. Catalonia is about 10% or 11%. Valencia also the same. So yes, be careful when you buy property. Depending on that, or where you do it, you will pay a different rate for this tax. Then there is property tax, or EV. Once you are owner of the property, you have to pay the EV, okay, which tends to be much cheaper than in the US. Okay, people said that here, what in the US you pay on a monthly basis for a similar property, in Spain that will be your annual payment. Therefore, it seems that in the US they're paying like 12 times the property tax, okay, in rough numbers. Now, there is also the municipal capital gains tax, okay, called plusvalía municipal, and also the general capital gains tax that we saw. It's part of the income tax that you pay annually. So these are different taxes. And actually, I have here a comparison of those two taxes. So, because a lot of people tend to confuse the plusvalía municipal and the capital gains tax. Imagine that you own a property here in Spain and you sell it, okay, but the property is in Spain. You have to pay two taxes. The first tax that you have to pay is a local town hall tax. Okay, there are different ways to calculate it, but basically it's the increase of land value. Okay, and when you go to pay this tax to the tax authorities in your city where you sold the property, they will tell you there's two calculations. This is the amount of tax for this calculation, and this is the other amount of tax. And of course, you will choose the lower one, and there could be huge differences, right? And then there is the capital gains tax, because if you made proceeds from your sale, let's say that you bought a property for let's say 100K and you sold it for 200, for the 100K that you made of difference, okay, or proceeds, you will have to pay capital gains tax when you file your taxes, your income taxes on June 30th, okay, and that they will pay a tax rate somewhere in the middle between 19% and 30%. Now, let's continue with the presentation. And there were also a lot of controversy because Mr. Pedro Sanchez, the Prime Minister of Spain, wants to tackle the housing crisis in Spain. And one of the things that he announced is that non-EU passport holders who are non-resident in Spain would be paying 100% of the purchase price as transfer tax. Okay, so for these people, if they bought a property of 300,000 euros in Spain, for transfer tax, they would be paying 300,000 euros. Right, so this would only apply for non-EU passport holders who are non-residents in Spain. Right, now it is, I have interviewed Ainhoa Manero from Stern Abogados, Marcos Gonzalez, expert tax advisor. You can find those videos on Spainguru's channel, on Sterna's channel as well. They're of course free to watch, where we are following this the evolution of this news, because it has strong implications for expats moving to Spain, thinking about buying property in Spain. But so far, we haven't had any news about this. It is hard that happens. Expert tax advisors say that it is extremely, extremely difficult. They don't understand how they could do this in a legal way, because it goes against basic principles from the European Union in terms of right to move, right of moving capitals inside the European Union. Therefore, they don't see it happening. But let's continue to watch the evolution of this news. So far, we didn't have any more news, and it seemed to be just a political announcement just to get some votes from people who thought that this was going to be a great idea to tackle the housing crisis. But I went a little bit deeper into this and I looked at the numbers. And even if they do this, I don't think they will solve any problem, because only 2.7% of the transactions last year were from non-EU, non-resident people. And of course, many of those non-EU nationals would become residents just to not pay 100% of the purchase price for transfer tax. So it would be even less percentage of all the transactions in 2024. So therefore, there wouldn't be any impact in the housing market. Therefore, this, it's not a decision based on data at all. It is more like a political announcement just to get some hype.
Just a quick moment. Over 60% of you watching right now aren't subscribed. That's a lot of people getting value without hitting that button. If my videos have helped you understand Spain's immigration process, visas, or life here even just once, please subscribe now. I'm working hard to reach 10,000 subscribers by the end of 2025, and your click truly makes a difference. Thanks so much. Now, let's keep going.
Around announcing, solutions for the housing crisis. Now let's talk about the capital gains tax a little bit more. How can I avoid Spanish capital gains tax? Now, there's a way to avoid it. First of all, there are ways to mitigate this capital gains tax if you're liable for it. There are certain conditions. If you're over 65 years of age, if you're selling your main property, if you reinvest all the proceeds of your previous sale into a Spanish property, okay? All those rules, if they apply to you, you'll be able to mitigate the payment of capital gains tax or even not pay it at all, okay? But the best way to not pay capital gains tax in Spain is to, if you can, if you're just moving for the first time to Spain and you're planning to sell your home, which is a pretty common scenario, is to time the sale of your property so that the sale of the property happens on a different tax year from which you become a Spanish tax resident. For example, if you sell your home on December 31st and you move to Spain on January 1st, the clock went back to zero on January 1st, new tax year. Okay, so if you sold last year and you become a Spanish tax resident in the following year, you wouldn't be liable for capital gains tax. Okay, now if you sell during the same calendar year, make sure not to fall in any of the three conditions to become a Spanish tax resident. The most common, we said 183 days in a calendar year. Therefore, not having any presence in Spain until July 2nd, okay? Because there's only 182 days left during that calendar year, right? As long as none of the two other conditions apply to you, right? Because if you sold in January and you moved on July 1st and you stayed every day until the end of the year, yes, and you didn't leave Spain, then you will become a Spanish tax resident retroactively from January 1st that same year. Therefore, the sale of your house would fall into the same tax year in which you became a Spanish tax resident, and they will claim capital gains tax from you, okay? Now, how do you tax this capital gains tax? As we said, from 19% to 30%. The way of calculating is the same progressive tax bracket system, right? So let's talk that. An example, if you bought for 100K and you sold for 200, you made 100K of capital gains. You apply the progressive tax rates, you will be paying around 22% effective tax rate. So you will be paying around 22,000 euros. Best would be to avoid paying that, right? This is the comparison with capital gains tax and the plusvalía municipal, different things. Now, another common question is, if you retire in Spain, is your pension taxable? You'll be taxed if you're a Spanish tax resident, okay? Now, what is the threshold for declaring the pensions? If you have a single income source, 22,000 euros annual threshold. But if you have multiple income sources, threshold goes down to 12,000 aggregate income and 1,500 from secondary sources. Now, also another trick is that pensions from abroad appear as a second payer, so If they're greater than 1,500 euros, you still must file. Progressive tax rates for pensions, ordinary income from 19% to 47% apply. Now, as per the Spanish, UK, or US tax treaties, government pensions and public pensions are not taxable in Spain. Okay, they will be taxed in origin. Okay, of course, this is mutual. Okay, but you have to be sure that the type of pension that you're receiving is a government or public pension, and for that, it's always good to check with the tax advisor just to make sure you're not making a costly mistake. Allowances for pensioners start at 6,700 euros of annual allowance, starting at 65 years old up to 74, and over 65 goes up to 8,100 euros annual allowance. Let's talk about taxation of American 401ks and Roth IRAs in Spain. 401ks taxations in Spain, the distributions of 401ks are taxed as general income, 19% to 47%. These accounts are traditionally exempt from Modelo 720 and wealth tax, but careful because there could be evolving interpretations, and depending on which tax expert you consult with, they will tell you the different scenarios that you would be facing depending on your risk appetite. Now, Roth IRA taxation, investment gains are taxed as income at progressive rates until up to 30%, just like capital gains tax, must be reported on Model 720 annually based on the account surrender value, again, as of December 31st. Could be subject to wealth tax with rates varying by region and also solidarity tax. Some key considerations, and this is circling back to the fact that there are evolving interpretations from Spanish tax authorities. There was a consulta vinculante. This is a document in which an individual asks for an official statement or interpretation of a certain rule. Yes, like this individual asks, hey guys, how are you going to be treating my 401ks or Roth IRAs for my 720 declaration? And the tax authorities said that they require to be reported Form 720, okay, possibly, right? So Spanish tax authorities are not judges, okay? These are not rulings from a judge. This is their interpretations and could be challenged, okay, by someone in court, okay? But it's important, I think, to bring to your attention that there is this consulta vinculante, and potentially when you engage with a tax advisor, mention the existence of this, because you want to make sure to be on the safe side when it comes to declaring your 401ks or Roth IRAs in the 720 or as income tax. Again, always seek professional advice, and you can find my my personally vetted experts on Spainguru.es. Also, potentially you can read my blog post about taxes in Spain for UK expats or for US expats, or how the 401ks or Roth IRAs are treated. Okay. Another question is, for non-lucrative visa holders, do I have to become a tax resident in order to renew my NLV? And the answer is no. You don't have to become a tax resident in Spain to renew your non-lucrative visa. Okay. And why do I say this so dramatically? Because a lot of people would be shocked at me saying this. Because many people are advised that you have to become a Spanish tax resident as of May 20th, 2025, because there is no new Reglamento de Extranjería or new ruling of the main organic law that states that in order to renew any temporary visa, among them the non-lucrative visa, you need to stay minimum 183 days in Spain, right? But there's many things to dissect here. First of all, what we said that the tax year is a calendar year. The immigration year is a natural year. When we talk that you have to stay at least 183 days, they're talking about the immigration year, not the tax year. They're not telling you, the paragraph doesn't say, if you want to renew your visa, you need to become a Spanish tax resident. No, it doesn't say that, right? It says you need to stay a minimum of 183 days in a natural year, right? And as we said, may or not overlap, right? One is calendar, one is natural year. So second of all, and this is huge, there is a Supreme Court ruling saying that legislators should not add a minimum stay requirement for the renewal of visas in a bylaw in the Reglamento de Extranjería. Why? Because it has lower hierarchy than the main organic law for 2000, and that's where they should add this minimum requirement. But doing that would require more procedures in the Congress, more political agreement, and they don't want to go through that. So they put this minimum stay requirement in the Reglamento de Extranjería, which is something that the Supreme Court of Spain says it is not legal. Okay, so this is the situation. It is an ambiguous situation, right? But if we're only talking about renewing the temporary visas like the non-lucrative visa, just the renewal, we're not talking about then going for the long-term visa, for the long-term residency, or for the Spanish citizenship. Those two, they have their own minimum stay requirements that should be complied with. But if you're only talking about renewing the non-lucrative visa or residency, they cannot deny you your renewal of your residency on the basis that you stayed in Spain less than 183 days in a natural year. They cannot, because the Supreme Court says they can't, and the Supreme Court is on the top of the law here, right? So this is the situation. Sorry, it takes so long to explain it, but sometimes it's not easy to go short on these things. So you can play with this situation. You don't have to become a Spanish tax resident. If you don't mind, if you're not interested in the long-term residency later on, there's minimum stay requirements, as we said. If you're just interested in renewing your residency, then you should be fine. Of course, I'm not a legal advisor. This is not legal advice. I have interviews with expert immigration lawyers on Spainguru's channel. If you are in this situation, if you're interested, watch them. And of course, get a consultation with them, because they will give you the right advice. Okay, here's the interview with Ainhoa Manero from Stern Abogado, NLV minimum stay. Read the QR code, watch the interview, because it will give you information straight from experts. Now, a little cheat sheet here. Spanish taxes cheat sheet. I try to condense everything that we spoke about to date in only one single sheet. First, tax residency in Spain. First condition, if you stay in Spain 183 days in a calendar year, days don't need to be consecutive, doesn't matter your immigration status, all physical presence counts. And also there are two other conditions, which is main source of income is from Spain, or your center of interest or family lives in Spain. Key tax obligations. Modelo 720, where you disclose the value and the net value of your assets overseas, and also your rights held abroad. There is the personal income tax that you pay on June 30th, and also quarterly if you are a contractor in Spain. The regional wealth tax that is different depending on where you live in Spain, and the nationwide solidarity tax that kicks in at 3 million euros, okay, but is anywhere in Spain. Then remember that generally Madrid and Andalusia are the most favorable regions in terms of this kind of taxes, also for gift and inheritance tax, for transfer tax when you buy secondhand property in Spain. Now, we also mentioned the special tax regime or Beckham law, where you would be paying a flat rate of 24% of your employment income, but nothing on your income source from outside of Spain. You wouldn't be paying wealth tax. You wouldn't have to file your 720. Many different things, but eligibility for this special tax regime is restricted to basically employees moving to Spain, and not to contractors. Okay. Then taxation of pensions. We said that they're taxed in Spain. So Social Security and private pensions are taxable, but the Spanish and US, UK tax treaties exempt from paying taxes in Spain for government or public pensions. Then we talked about taxation of investment accounts in the US, like 401ks and Roth IRAs, and the reporting in 720, which is a little bit ambiguous. We talked about taxes for digital nomads, okay? For employees, for contractors, you have to become an autonomous, start paying Social Security in Spain, or if you are moving as an employee, potentially eligible for Beckham Law, and you have to provide certificate of coverage from the Social Security in your home country. Then additional taxes, inheritance and gift tax, property tax, capital gains tax, transfer tax. We talked about all those. And the deadlines to remember. First, March 31st, Modelo 720. June 30th, income tax. June 30th, wealth tax. July 31st, solidarity tax. And if you're a contractor, quarterly payments of your income tax and your VAT tax as well. Remember that Spainguru can help. You can use Spainguru for absolutely free. We have wonderful reviews out there. So people are very, very happy with information that they find on Spainguru. And I have personally vetted my recommended professionals for immigration, for tax advice. Financial planning also is very important, in my opinion. It's very interesting. Today, I made an interview to Jake Barber from SJB Global, a very high reputation firm from Marbella for financial planning. And it is very, very interesting, and in my opinion, essential if you move to Spain and if you have assets. If you move to Spain or you're in the phase of the moving to Spain decision making, it is important that you understand the implications on how you structure your move to Spain so that everything is tied up and you don't have costly surprises. So it's very, very important in my opinion. Of course, it's optional. All this is optional. You don't have to do it, but it's what I would do. And also you can find health insurances for visas, medical certificates, phone translations, apostille services, bank accounts, money transfer services, and so much more. You just go to spainguru.es, click on services, huge page there, and I'm sure that everything that you see is quite relevant to your move to Spain. So yes, I won't make you lose time, okay? All this is relevant in my opinion. I only add services that make sense, that add value to my users. And of course, you can join my other free webinars here: Spanish and lucrative visa, Q&A session, Spanish taxes, you are here, moving to Spain, Spanish digital nomad, and soon I'm gonna add a new webinar as well. Let's stay in touch. You can always send me an email to hello@spainguru.es. I always answer my emails. Join the Facebook groups, watch the YouTube channel, join the newsletter, and remember, the content of this webinar is for information purposes only, and it's not legal or tax advice. Make sure to consult with an expert tax advisor. Now let's go to the Q&A session. Okay, if you had to go earlier, please leave a review on Trustpilot. The button is there on the top. And remember to comment if you're watching this video on YouTube. Any questions about taxes, about moving to Spain, about Spanish visas, you name it. Ask me anything related to those topics and comment below. Now let's go to the Q&A session. And first of all, thank you so much for everyone to join today, especially for people who had to wake up even earlier to join because of the time change. Something that is out of my control. All these time changes, many people are against it. Even the government says that it doesn't make any sense. We don't save any energy by doing this, or there's nothing to gain from it. So I don't know. It's quite controversial. All right, Josmar, thank you so much for joining today. Is there a process to cease being a tax resident if you decide you want to move away after a few years? Yes. The process is like, there's a form. It's the form 030, where you communicate. You have to communicate to the tax authorities, okay, that you are leaving, okay. And this is the Modelo 030, okay, which is Censo de Obligados Tributarios, Declaración Censal de Alta, Cambios de Domicilio o Variación de Datos Personales. So anything that changes your situation, your tax situation in Spain, must be informed to the Agencia Tributaria. It's not like you just pack your things, you leave, and you expect that the Agencia Tributaria knows what your plans are. No, it's important that also you use a tax advisor, you use a gestor or tax accountant to make sure that you do this correctly so that everything is done on a clear way. Because, of course, the Spanish tax authorities are not especially happy to see you leaving. They're going to miss you. They're going to miss you a lot. Therefore, you have to make sure that you inform them that you are leaving. Okay, so if you understand me correctly. Let's go with the next question. Let me see here. Thank you so much for joining today, Keith. I guess is cash in a bank account taxable as income when moving to Spain? If I sell my house in the US and pay taxes on that in the US, I am not a tax resident that year, put that money in a bank account. Is it taxable later when I become a resident? This is a good question. Okay, so let me see if I can explain it. Let me see if I can explain it. So let me see if I can write something so it makes easier to show it on your computer. Let's share my screen and let's see. So I have a video of this. Is cash taxable in Spain? No, or is yes, cash or deposits? No, there's a video about this. First of all, now cash by itself is not taxable. If you have $1 million in your bank account, it's not taxable. Okay, but be careful. The interest, if you're generating interest from that cash, is taxable. Yes, and as we said, this goes from 19% to 30% in that category. Okay, impuesto al ahorro. See, I think if you generate income, right? So if you are making 3% on that million euros per year, yes. So I think that is 3,000 euros. You will pay tax on that. And if you have, for example, 1 million euros of cash in a bank in the US, this is well beyond the threshold of the 720 form, yes, that says that bank accounts category over 50K euros, okay, in euros, must be disclosed, okay? So you don't pay tax on you're disclosing their existence, okay? But the tax authorities will say, you have €1 million in a bank account. That is part of your net worth, yes? That's you have assets worth €1 million. So for the wealth tax, so if you live in Catalonia, wealth tax triggers at 500K without deductions or anything, all right? So only because of this €1 million in your bank, you are already 500K over the threshold for the wealth tax in Catalonia, for example, right? So you would be paying regional wealth tax, okay? You understand me that there is so many variations and so many implications on the specifics of where you are living, how basically, like, yes, where you are living and then how you disclose this, and if you have allowances or deductions because you have a property, etc., etc. There could be variations, but yes, cash is not taxable in Spain. Okay, it is not. But as you can see, there are some ramifications on it that could bring some liabilities via the interest that you generate or via the wealth tax that is calculated over the net value of your assets and rights held worldwide. Okay, so yes, I hope that that explains more or less how it is. And I don't know if there are other more implications, but at least those two are, I think, the most the ones that come to my mind right now. Josmar, regarding the solidarity tax, you mentioned both 3 million and 3.7 million. Why the difference? So, because there is a 700,000 euros allowance, I believe. Okay, so really, like, it starts at 3 million, but there is like a general allowance of 700,000 euros allowance. Okay, that is general, or maybe it depends. I'm not quite sure if there is any variation on that allowance, or something that you can deduct from the taxable amount. Okay, so depending who you ask, it's like, oh, it's 3 million without allowances, blah blah blah, or it is 3.7 with the allowance. Yes. So yeah, this is how Impuesto Solidaridad de Grandes Fortunas. Maybe I can show you here if I do some screen sharing here. Impuesto temporal. It is a temporary tax that never went away, right? Never went away, guys, and probably will never do. But there is there is a big case that now got arrived to the Supreme Court, or one top court, about the wealth tax, that it says that it is it's not from the Constitution, unconstitutional, or something like that. That shouldn't be applied, etc., because you already paid taxes before, so you are doing double taxation on the same income. So yes, this is something that is being challenged now after many years, but let's see how it goes, right? Base imponible. You see, this is impuesto neto superior, neto, a net wealth of 3 million euros. Okay. And then you have the bonifications or the allowances, etc., etc. So yes, I mean, definitely, if you have that net worth, which I'm happy you have, I love that you have it. Okay, a lot of people in Spain don't like people with high net worth for some reason, but I love that people have success in life. But if you're in this situation, definitely go with a tax advisor, okay, and a financial planner, because it will be money well spent, for sure, well invested. All right, so more solidarity tax. Let's go with the next one. Can married people file jointly? Yes. If not, should money be split to avoid wealth tax or lower tax burden? So first of all, if you're married, you can file taxes jointly. Okay, this makes sense. For example, if you or your wife doesn't work and only one of you works, it makes total sense to file jointly. For example, in my case, I work. I run Spainguru. My wife, she has her own company, marketing platform. We both make money, and it doesn't make any difference filing together or not. Okay, but when there's a big difference for income tax, it makes total sense to file jointly, because then your let's say the progressive tax rates will be applied to you, but divided by two people. So it makes total sense. For the wealth tax, I'm always very bad at explaining it, but basically it will depend on how your assets are considered within your couple. So in Spain, you have two regimes. When you are married, you have separación de bienes, okay, or you have gananciales. Gananciales is that as a couple, you're one single unit, and all the assets are owned jointly, okay. Whereas separación de bienes, okay, are like each of the individuals have their own assets, right? So the husband has, 3 houses, and the wife has 5 houses, and they're separately, even if they're married, right? So depending how is the regime within your couple, yes, you are gonna be considered to have different the calculation on how your net worth will depend on that fact. Not so much like if you file jointly or not. You will file, if I understand well, okay, I'm not a tax advisor, and I have never been in this situation, but what I understand from speaking to professionals is that it's not that you file jointly or not. It will depend on the type of how your assets are counted in your marriage situation, if it's a single unit or if it's divided. and therefore they will apply different allowances depending on that happens, depending on that. Okay, I hope that makes sense. It's very hard for me to explain it because and I need to refresh it. Honestly, after this webinar, I promise I will read that again so that I come up with an easier explanation that we both understand. Sorry for that. If I am an employee and also owner of a U.S. corporation, is it correct that I need to file as an autonomo because I am not an independent contractor? So I don't know exactly about that. I don't know the answer to that question. Too technical for me, right? So in Spain, for example, if you're an owner of a company here, you need to be an autonomo. This is how it works here in Spain. Okay, but I don't know if you come here to Spain and you own a corporation outside. I don't know very well. I'm sorry, I can't help you with that. I would be giving you bad information, probably. Not sure of that. Since autonomous in Spain on the DNB are not eligible for Beckham law, are there similar schemes to help autonomous reduce their tax burden, either as new tax residents or in general? So first thing is the quota cero. Okay, it's not really like reduction of taxes, but it is social security contributions per month. The first year starts at 80 euros per month. The authorities don't know your income, let's say. So you pay, the first year you pay 80 euros per month or 85. There are variations. I don't know why, but it's between 80 and 90 euros per month. Now, in certain communities, most of communities in Spain, I could say like Madrid, Andalusia, I heard also Catalonia, you can claim what you pay during the first year as Social Security. It's called quota cero. You file something, and if you started paying in January, let's say, okay, doesn't have to, but if you started in January, the following year in January, you can claim that they paid you back what you paid in Social Security during the first year, and you will get it paid like 4 months later. That's what happened with me. Okay, I'm living in Andalusia. Okay, so it's not really like you pay less tax, but you will get some money back. Okay, you will get like 1,000 euros back for the first year that you pay Social Security, right? The second year it will go up according to your income. Okay, and the third year again as well, right? So this one something that can help you pay a little bit less. Okay, so about reducing your tax burden. Apart from this, I'm not very, very sure you can. But if you hear about something, let me know. There are a lot of stuff going out there, Instagram and all that. Like you have an LLC in the States, and if you are offering like a digital service, purely digital service, then those certain LLCs of certain states in the States will let you spend all the income, and it can be deducted from the, let's say, calculation of your LLC at the end of the year. Therefore, you wouldn't be profitable. Therefore, you wouldn't be paying taxes in Spain. But there is a lot of, let's say, controversy about this, and I'm not very, very sure how the Spanish tax authorities would treat that, and probably some scams going on there as well. Okay, not very serious, some of those ads on social media. So really, I don't know. I pay all my taxes, and I'm pretty I don't know about ways to mitigate that, really. Do you need to be a tax resident to be able to apply for successfully for citizenship? So as far as I understand, this is a great question. I think you have to, because first of all, the minimum stay requirements for applying for citizenship, not as for the renewal of temporary visas, would actually make you Spanish tax resident in practice, first of all. And then one of the things that you need to provide is that, a certification that you don't owe any money, to Social Security or Spanish tax authorities. And also, of course, your back, your police check for records in Spain and so on. So yes, definitely, I believe at least you can't owe money to Spanish authorities, taxes or social security. For sure, you need to provide a certification for that. About being a tax resident, as I said, I think it is like a natural outcome of the minimum stay requirements before being eligible to apply for the Spanish passport. That would be my answer. If I sold my house back home when I had already been a tax resident in Spain, but purchased a house here with the same value in the same year, then I am exempt from paying capital gains tax, correct? Okay, so I don't know exactly the conditions in order not to pay capital gains tax in Spain for this situation. I think you have to be also 65 years old, I believe. Let me see if I can check that for you. ¿Cómo reducir condiciones para no pagar impuesto ganancias del capital? Wow, ácido úrico. No. Okay. Sell your property if you're older than 65. You won't have to pay your tax. So, así que está cerca de esa edad, será positivo, bla, bla, bla. How can you... Yeah, so there are a few conditions there that I don't know by heart, but if you search this on Google, and I would put it in the chat, yes, like this would be the search term, I'm sure you will get out some conditions there. So yes, ganancias patrimoniales exentas. Yes, I don't know in my heart. I have an article on Spainguru about this that I should reread, but yeah, what I always tend to focus on is about timing your move. But if it's true that many people are already living here and they don't have that possibility because they already became Spanish tax residents, but potentially could fall into any of those conditions in order to mitigate that capital gains tax. Yeah, there are possibilities. There are possibilities to not pay it. Now let's go with the next one. Questions? What if you own capital gains taxes on the sale or your home in the US? Would you also owe CGT in Spain? Well, what I understand is that you have a US-Spain tax treaty that allow you not to pay taxes on the same thing, okay? So if you pay taxes in Spain about this thing, you can credit that payment towards what your liability in the US is, and vice versa, right? You won't pay taxes twice, right? On the same thing. So yes, in a way, you're liable to pay taxes in both jurisdictions, but the treaty says, there won't be double taxation, right? That's why the name of double taxation. Therefore, you will not pay twice, but you will end up paying the highest of both, right? Because if you pay too little in Spain and in the US is much higher, which is not common, right? That you will have to pay the difference to the US authorities because your credit won't be enough, or vice versa, right? You pay $1,000 in the US, but Spain says, hey, look, it's 20,000 in Spain. You still have to pay me 19,000, right? This is how it works. Next one. Do you need to pay impuestos sobre la renta de no residentes if you own a property in Spain and do not rent the property? So. You need to pay taxes on the rental income of your property as a non-resident in Spain when you don't rent the property. This is a great question, and a little boy would tell you, of course, if you're not renting it, you wouldn't pay taxes, right? That would be the just, fair thing to do, but it's not that fair. Unfortunately, Spanish tax authorities would consider a tax even if your property doesn't declare being rented. And that tax is, I think, a percentage over the cadastral value on an annual basis. So you will still have to pay some taxes on the empty property. Also, recently there was a ruling of how was the ruling? Some non-resident from Switzerland, she owns a property here in Spain, and tax authorities claim taxes on rental, on her rental on that property. But she said, I got ocupas, I got squatters, they stopped paying me the rent, therefore I shouldn't be paying taxes on the rent. And she appealed this interpretation of the tax authorities, and the ruling said that she still had to pay taxes, right? This is related but not the same thing. So yes, the authorities are quite like, yeah, it doesn't matter if you rent them or not. You will have to pay taxes. Of course, if you rent them, you have to pay taxes on the income as a non-resident, 24% for non-EU passport holders, 19% for EU passport holders. But if you don't rent them, they will still attribute certain income, even if you didn't declare it. As a non-resident, I don't know if things change, but as a resident here, if you have an empty property, you will still have to pay certain taxes, right? And there's, I'm not sure if it will also depend on a regional basis, because now with the housing crisis, a lot of people are, different politicians are saying like, oh yeah, we should tax more the empty properties, etc., right? And they do it via this rule, yes. So yeah, that's my comment on it. It's not quite a clear answer, but at least it tells you a little bit how things are moving forward here in Spain about having properties. Authorities have a big problem with the housing crisis, and they don't build social buildings, and they want you to rent it out and charge very little for it. This is what they want. This is for sure. If you own a property, today there was a proposal of a royal decree from Podemos, which is one of the coalition members that governs this country for the last 7 years, that it is 7 points in which basically, well, they want to freeze the rentals. They want not to allow people to buy a property to rent it out unless it is below the price that they will set by law, etc., etc. This is a proposal that, they're having these proposals every single quarter. But yeah, again, what they want is that, yes, you are the owner of a property, but tell you how to rent it out with a lot of rules, etc., etc. So yeah, that's a little bit the situation now, because it is really the main worry of the Spanish society is the housing crisis. In fact, this top number one concern when they ask this to people. So I don't see any more questions. I really appreciate, I don't know if I left any question unanswered. Thank you so much for joining today. It was a real pleasure having you here. And thank you so much, especially for people who woke up earlier than usual even. So really appreciate that. I will process this video, upload it to Spainguru's YouTube channel. If you're watching this on YouTube, please comment on the video, ask your questions about Spanish taxes or anything about Spain. I'll happily answer or at least point you in the right direction if I don't know the answer. If you think the information I share with you today is valuable, remember, this is not tax advice or legal advice, but still, I'm sure you learned something, maybe something new today. Please leave a review on Trustpilot. If you use Spainguru.es for anything, for information, or one of my better partners and you're happy with it, please leave a review in Trustpilot. It really helps. And I will be sending you good vibes to you for your move to Spain. That's for sure. And yeah, I see you around. Okay, have a wonderful week and take care. Stay in touch. My email is hello@spainguru.es, and I'll be seeing you in the next webinar or in the groups. Thank you. Bye-bye.